Why is the equity market so resilient, so insulated, it seems, at least on the surface, from what's happening down in DC?
Basically, we have all the economic pieces in place for this bull market to continue. You have historically low interest rates, inflation remains benign, and even when you think about D.C., if some of the tax reform and fiscal stimulus finally comes into place, that could help extend this bull market into decade territory.
It's curious that you think we've got the economic fundamentals in place, but the FX market is pricing out the likelihood of more interest rate hikes from the Federal Reserve and fading this U.S. economy. What do you make of that? Because the signal I see in the FX market, the bond market, is pretty different to the kind of thing you've just laid out.
Well, the FX markets actually are a positive also because a weak dollar is great for these multinational companies and for these industrials. And actually, while we are big fans of the U.S. bull market, we actually prefer non-U.S. markets. We think Europe is still a laggard to the U.S. and it'll continue to have a catch-up trade. The economies in Europe are much stronger than in the U.S. And also, we're big fans of emerging markets, areas actually like Brazil, where you've seen political issues, but we think the reform story over there will remain in place. So we think there is more value to be had outside of the U.S.
Sticking with the U.S. for just a second, Oliver, it really becomes a case of how much are you factoring in any kind of Trump agenda. And Mike Wilson, the biggest bull on the street, 2,700, right? This is what he said in a note yesterday. He says, we think the catalyst on PE expansion will be more policy certainty rather than the outcome itself. No matter what gets passed in the next few months, we think just moving forward with a decision on the Affordable Care Act and taxes will provide the certainty necessary for companies and individuals to act on their higher confidence. And we hear that from CEOs. I don't care if it's 28% or 15% corporate tax rate, just get something done. Is that a consensus view on the street?
It's an interesting view, and I guess we're going to find out how accurate that is this morning, because it seems like we got a pretty solid decision on health care. It's going to be booted down the road for another 2 years. So holding on to the hopes that you're going to get some changes from that are not going to happen anytime soon. That leaves us with tax reform, and it leaves us with financial regulation and what that means. And I think that there is the idea that this could be extended to an even longer bull market if this stuff happens. The question is whether or not you want to make that bet right now. I think that when you look across the market, there still are some of these places and within some of the sectors that seem a little bit lofty given the gains post-election and the gains since then. The financials are the easiest ones. I mean, you had such a pop after the election. If you look at the gains since then through now, really all that appreciation within that part of the market came within those first couple months. So I think that you might be holding on to something here that timing-wise is pretty hard to get your hands around, and perhaps some of that's factoring into why these banks are doing a little bit weaker on top of fundamentals is because there have been indications those fundamentals I think were going to soften this quarter.
Sarah,